Hello, it's Adil bringing you a review of the US markets from an intermarket analysis perspective for the 13th of March, or April should I say, 2015 onwards. Okay, what's happening here and how do we interpret this market that certainly seems to be ripping higher regardless of the concerns regarding a stronger dollar. As we all know, stronger dollar hits earnings, okay, and going forward, and obviously as we know, a stronger dollar usually implies that a rate hike is coming, and if a rate hike is coming, especially with all the Fed rhetoric, which has been very hawkish as of late, even after NFP, the economic data certainly seems to be going towards a direction of a potential rate hike as early as June, given the fact that the markets, even though they know that economic data supports a rate hike, then they are not concerned whatsoever, and the US markets continue to ramp higher. Now, from my perspective, that certainly is a concern. Now, given the fact, first of all, it's certainly suspicious that it happens in a light volume Easter holiday. That certainly isn't very convincing, number one. Number two, obviously the reason why the US markets are going higher is because the European markets certainly are being thrust higher due to the cheaper euro, and Asian markets certainly seem to be on a tear in terms of their buying spree. So whether or not that's masking the strength in the US markets, given the fact that they're following Europe and Asia higher, okay, or they're being led by a stronger partner, okay, and it's actually masking or hiding the weakness in the US markets, given the fact that going forward the earnings picture certainly won't be as bright, okay, and given the fact that the US dollar obviously is hurting the ability of certain companies to export, etc., all over the world. Although the argument, a counter argument to that, is that the US market is, or the US economy isn't a export-led economy. Okay, that's fine. But from our perspective, or from my perspective, given the fact that the economic data hasn't been as spectacular as one would certainly presume or assume, given the fact that or basically the economic data isn't strong enough to absorb a interest rate hike, from my perspective, okay, and that should technically be negative for US markets, and that certainly hasn't been the case. Also, we have the wild cards, so the exogenous variable shocks such as Greece. Again, just this weekend there's an article being cited that Greece certainly is going for default. That certainly hasn't been factored into the equation and the repercussions of that. The markets certainly seem to be hell-bent on moving higher on this opium trade. And also the situation in Yemen. I mean, the repercussions of obviously Saudi-Iran war breaking out, etc. The repercussions there. Also the Iranian deal not being accepted thus far, therefore the repercussions from there. So there is a lot of headwinds in terms of the actual economy itself, and whether it can sustain a move higher. So Yemen, Greece, plus stronger dollar stroke rate hikes are certainly negative for the markets, but a stronger Europe and a stronger Asia, we have to respect the tape, is certainly propelling the markets higher. Even though we have the Greece situation in Europe, that still certainly is not deterring the buyers from stepping in and pushing the markets to new highs, as the German DAX and the CAC have obviously confirmed this week. So we have to respect price action, and that is the situation right now, okay? So a stronger dollar certainly isn't affecting US markets at present. A stronger dollar is being accompanied with the rising equity markets, and that's basically a status quo at present. If that's a status quo, let's see how the markets are faring from a technical perspective, and let's see what the strength or weakness is. Okay, let's start with the S&P 500. Okay, let's start with the weekly chart. The weekly chart, as we all know, that key level was held. Markets have pushed higher, but for how long? Okay, daily chart, let's move to the daily chart. Again, we've certainly thrust higher on the daily chart. We have a key trend line here, which I'm going to draw. So from a daily chart perspective, let me just get rid of these arrows. Not sure why they've been put here. Okay, so from a daily chart perspective, we basically have this situation here. So resistance level on the S&P 500 for the next level is around 2110. Okay, from the daily chart perspective, given the fact that we had a pivot high to pivot low, so around the 75% we found resistance, and again you're looking at around the 75%, looking for resistance here as well. Okay, so diagonal trendline resistance basically is giving you good resistance around the 2110 level, given the fact that this trend line is going to hold. Obviously, if that doesn't hold, then you're going to go to that resistance level at 2115 and 2119. But like I said, given the rising dollar, I find that very hard to believe that we are going to go in that direction for now anyway. Okay, so the resistance is currently 2102, resistance level, solid resistance around the 2108, 2115 level on the daily chart. 60-minute chart, yes, we have thrust higher, very impressive thus far. Okay, so like I said, we have to respect the tape, and that's basically where we find ourselves. In terms of resistance, I'm just going to draw these levels in. Okay, so 2104 is resistance on a horizontal level. Then you have resistance then next at 2114, 2115. You can also draw your diagonal trend line here as well. Okay, and you are finding resistance around the 2108 level as well. Okay, for the S&P 500. That's basically where we are at this current juncture. Obviously, we broke out this resistance level, and the market continues to thrust higher. So we have to respect that for now. Okay, that's basically where we are. Okie dokie. So that's basically how we stand. Okay, so we've obviously broken out this rising wedge and certainly thrust higher. Ascending triangle. Okay, so again, resistance level is going to be in this region. Okay, nothing else that I can see in terms of any other level. Only the level that I can see at the moment is 2104 and 2108. So they are two levels of resistance on the S&P 500 on the 60-minute chart. The 10-minute chart, obviously we are in this channel, or bullish channel at present. There is a threat of breaking out this channel onto the downside, and obviously if we do come below, then we have this resistance level here. Okay, so there's no unfilled gaps left behind, which is unlikely given the certainly unlike the European markets, which certainly have plenty of unfilled gaps left behind. Okay, so we have this resistance level here. For now, we have a resistance level here as well. So there's two levels of resistance, and then we have support around the 2085, 2090 level on the S&P 500 if we do break downwards. Okay, so let's confirm that strength and weakness now with the IWN and the IWM. Okay, the Russell. So let me just bring them up. Okay, so ETFs. Okay, so the daily chart certainly is still showing weakness from my perspective. The weekly chart still is an inside bar, so no real new high. So again, either it's lagging or it's showing weakness. It's either or. I tend to go towards the ideal concept that it's lagging, and therefore you are looking to break down. Now we have consolidated within this red candle. We still haven't broken above it, which is certainly interesting. So we can class it as bearish consolidation and looking for another move lower. Okay, looking for a potential break on the downside. 60-minute chart, again, ever since we've closed that gap, this has held resistance. So as you can see, the IWM or the Russell 2000 is certainly lagging, and it's certainly not showing support or strength. So therefore that indicates to me that the S&P 500 certainly is stuck at this 2104, 2108 level, and I find it very hard for it to push higher than that. Okay, now the next chart that we look at is the IWN. Okay, this is the small cap. Okay, let's just assess this and see exactly where this stands at present. So weekly chart, again, inside bar of this red candle, so therefore obviously indicating resistance. This pivot high here and here certainly is holding for now on the weekly chart. If we shift to a daily chart, ever since we've closed that gap, as you can see in the daily chart, the IWN has held resistance. Again, this looks like a bear flag given the nature of the pattern here. As you can see here, consolidating, and then looking for a potential break lower. Okay, let's go to a 60-minute chart now. 60-minute chart, as you can see here, it's lower highs so far. Lower highs. Obviously, we've broken out of this channel, and certainly are trading well below. So you do have an unfilled gap below that certainly needs to be closed here, and certainly looking for a potential move lower as well. Okay, on the 60-minute chart. So the IWM and the IWM certainly are weak, and therefore confirming the resistance on the S&P 500. Okay, now let's move to the Dow, and let's try and fathom exactly what's happening there. So the Dow Transportation Average, okay, again, daily chart certainly lagging, certainly not pushing higher or testing the previous resistance, or even making, forget even making new highs. It's certainly lagging, and certainly is a weak link. Okay, again, you are into previous horizontal support equals resistance, therefore again another weak link, and that's why I have been perplexed as to the strength of the FTSE 100 this week. Obviously the Dow and the FTSE generally tend to be intertwined, and also the S&P to a large extent, but given the fact that the S&P has been lagging, I expect the FTSE to lag and hold resistance as well. Certainly not pop above 7,000. Obviously BG and Shell have played a big part to that, and obviously Burberry did too as well, with rumours of a potential takeover. But again, still, okay, it certainly is baffling to see the FTSE certainly propel higher. Mainly, I mean, you can attribute that, looking back in hindsight, you can say that the European markets are up quite stellar, and obviously the Asian markets are higher as well, and that's propelled it higher. That's obviously in hindsight, but in real time, it's very hard for me to observe and forecast and expect that. Okay, so let's just cross-reference that with the Dow 30 now that we've seen the Dow transport certainly are weak. I go to the Dow 30, start with a weekly chart as always. Okay, again, same concept here. It's an inside bar. The red candle certainly is in control. We haven't pulled or pushed higher above it. The daily chart certainly is coming or slamming into resistance as we speak, around the 18,060, potentially higher at 18,080, looking for a lower high on the Dow 30. Okay, 60-minute chart, we can certainly observe that as well. Obviously, we've pushed higher above the previous resistance level. The next resistance level potentially here, and previous support equals resistance here as well, and that's basically what we're observing at this current juncture. So we have this level and this level here, and you are looking at 18,100, 18,080 as being solid resistance on the Dow. If that means solid resistance in the Dow, then that means solid resistance in the FTSE and global markets in total. Okay, that's my interpretation of current events. Okay. The one factor here as well is the Nikkei, and even the fact that we did push higher and break out above the previous high, it certainly did put in a red candle, so certainly some lack of conviction there. The weekly chart certainly is certainly fine from that perspective, but the daily chart certainly showed some type of exhaustion and a potential push and a sell-off lower. Okay, so that certainly is something that we need to take into consideration, and also the Shanghai as well. The daily charts, yes, it has pushed higher, but there is an unfilled gap below, and it certainly seems overbought from my perspective, especially given the fact that from a weekly chart perspective, it is now coming into resistance, as you can see here, gap fill resistance on a weekly chart. Okay, now let's also track the Wilshire as well. That will give us an overall understanding of the US markets and how strong they are. So if I just bring up the Wilshire index, okay, start with the daily chart first of all. Okay, so certainly are pushing higher, but remember, this is a lower high thus far. We've already put in a double top on the Wilshire, and now it's all about the actual it's all about the lower high now. Okay, so if I use my Fibonacci tool, take the pivot high, okay, take it to the pivot low, and you are into that fib 75% resistance, and therefore are looking for a potential move or reversal. Okay, 60-minute chart again. Obviously we have pushed higher, so that's very impressive. You do have resistance around this region here, obviously here, so certainly solid resistance. I mean, if we go back and test 29,950, then that's totally a different story, and that will be dictated between what happens with the Asian session, what happens with commodities, and obviously economic data in general, but very hard to see a continued thrust higher from my perspective. Okay, so the Dow 30, let's bring that up as well. Here we go. Okay, so I've already discussed the Dow 30 as well. Okay, so basically into or approaching resistance with regards to the Dow and the Nasdaq. Okay, now let's go to the Nasdaq now, with the Dow and the S&P has certainly been covered. So if I move to the Nasdaq, bring up a chart of the Nasdaq for you. Here we go. Okay, so daily chart of the Nasdaq. Obviously, we've pushed higher. We are into that fib 61 to approaching 75% retracement. We have put in a double top, so therefore we are expecting a lower high. It's all about expecting a lower high on this index, especially after a double top from my perspective. A 60-minute chart, yes, it certainly looks impressive given the thrust higher and the move that we've seen thus far. You do have this potential resistance around this region here, where previous support equals resistance and vice versa. And you are looking at resistance around this 4422 level, which, like I said, is the fib 75% resistance as well with regards to the actual movement in the market. So bring this up. Okay, that's basically where we are. Okay, so that's your Nasdaq. Now the next one we look at now is going to be the semicons, and let's see where exactly they are, or the biotech should I say. So the daily chart of the biotech sector, as we can see here, I was looking for a potential H&S formation. I will continue to look to potential H&S formation given the fact that we are into fib 61% on the daily chart of the biotechs. Okay, that's going to be very interesting going forward. A 60-minute chart at this very moment in time, yes, we have pushed higher, so therefore we have to take that into consideration. You do have previous support equals resistance as well. Okay, so that certainly needs to be respected for now. And we've looked at a potential here. Okay, nothing really at present, but we are looking at a potential breakdown here, although we have to respect given the fact that a double bottom has held, and whether or not we're looking for a lower high. You do have an unfilled gap up here on a 60-minute chart that may well be targeted, but for now you are coming into a resistance on the biotechs. Okay, now let's have a look at the semicons. Semiconductors daily chart. Again, we are into that fib 61% given the fact that you do have this potential H&S top. If I take the pivot low from here to connect it to here, and you have your left shoulder in already, you obviously a double top head, and now we're looking for a potential right holder, which we are into 61 to 75% fib resistance for the right shoulder. So again, this certainly looks very bearish as well, semiconductors. 60-minute chart, we've slammed into the 200 MA, so again that obviously comes into resistance. You do have previous support equals resistance in that region here. Nothing else other than that, to be honest with you. Obviously previous support equals resistance here as well. So there's two areas of resistance, but we do have this unfilled gap that may well want to close before we move lower. That's certainly something to think about, but the double top certainly is a scenario that usually indicates bearishness, and this is just a dead cat bounce or a potential bear flag situation before the next move lower. So from my perspective, US markets certainly are approaching into resistance, and therefore we're looking for a potential move lower from my perspective. Okay folks, so I think that covers everything from a technical perspective with regards to US markets. There is a VIX index which I can certainly put forth, but I think that should be sufficient for now, and we are looking for a potential move lower. Also, given the fact that the oil price obviously is dictating things in terms of the price action in equities, given the fact that there is a correlation, a very strong correlation between them. So let's just bring that out as well and see if I can discuss that with you. So okay, so crude oil. Okay, so crude oil at this very moment in time, yes, you have this bear flag or bearish engulfing candle, and we are consolidating within it on a daily chart. The 4 hour, just bring that up for you. 4 hour, obviously you are looking for a potential lower high, and this is what we're looking for. Here we go, looking for a potential lower high here. So you have this potential formation here, which again you are looking for this lower high on the oil chart and looking for a potential flush lower. So if I take the pivot high, pivot low here, and let's see if we can play out with this regard to this H&S formation. So you have this move higher here, then obviously we have this thrust here, we come back here, we're creating this right shoulder, then looking for a potential sell-off with regards to the oil chart. So a 60-minute chart, see if we can get a better insight. Again, you are making a potential right shoulder or a base here for a potential thrust lower. So therefore, from my perspective, US markets are coming into resistance and approaching resistance. If they continue to push higher, that will be based on the European markets moving higher and the Asian markets moving higher, and that will be very interesting to see if that can certainly continue. It's a very impressive rally in the next week, and obviously the Easter situation, light volume, obviously scenario that is supporting equities at present. Whether that will continue, my understanding, very hard, given the fact that you have Yemen in the background, you have Greece wildcard in the background, and obviously you have rate rises coming as well. Hence the reason why I have been baffled with regards to this rally thus far, especially in Europe and Asia. Okay, folks, so risk on, risk off, wax on, wax off. Goodbye now.